Is that what we're talking about today?
It'll definitely be a mix of that, mix of cattle, and the unforgiving, just the unforgiving, the way the grains have traded this year.
Welcome to Hedge Heads, where hosts Jon Prischman and Ryan Tungseth discuss commodity markets, hedging, and anything related to trading futures. Remember, the risk of loss in trading commodity interests can be substantial. These are opinions only and not trading advice. While no one knows where the market's going, they're not afraid to share some ideas.
Well, John, we're coming back from the 4th of July, and that amazing rally leading in to the 4th of July. It was spectacular. Big news coming. We talked about it Thursday.
Day and a half rally. It was confusing when it was happening. It was very believable. Like, oh boy, the word's out. The guys, the Wall Street guys, they got the info and they're buying aggressively. There was volume. It wasn't one of these thin holiday deals. There's definitely volume there, and it got me thinking, I don't want to do anything besides, before this huge trade deal that's going to be announced that people, I don't know how the rumor even started. I do think it was weird that he was going to Iowa to just kind of randomly to talk. So that's kind of, how it built. And then all of a sudden, we were at closing in at $4.53 for March.
12 cents up, 13 cents up on Wednesday, and then another 10 or something on Thursday.
And this is like the third time where it's getting price levels where you're talking to guys. Are we doing this? Are we shorting calls? Are we shorting futures? Are we going to buy more puts? What are we doing here? Are we going to buy both like a put spread on the way down? And then the complete and utter collapse today. And that's the way this has been going for a long time. This is the 2014 worst case scenario that we've talked about. There's some years, and the last one that I remember, I believe, was 2014. It was good weather from pretty much day one. And then the rain started falling after they planted it. And that's exactly the way this one's tracking. There's no threatening weather. Of course, you can have your problem areas, but these areas are really small. I've talked to a guy in Minnesota, one of the clients, and he is actually too wet, and it's sitting in water still. But those stories are few and far between, and then you're going to have guys, of course, missing rain. But you do have you're running out of time. We're going into pollinations, and you don't have a big story. And things collapse today. There's always one big collapse day in summer, and it sure felt like today.
Yeah, I will say, so this is my my week at the lake, which I have my inside source family member that drives here.
Yep.
Knows crops well. He said Indiana dry, looked terrible.
Okay.
They had pivots, but anywhere the pivots don't hit, it was, what did he say? Pineapple. It looked like pineapple.
Yeah, and it's on the drought monitor for sure. I mean, there is a pocket, and part of it's Ohio. And that's about as exciting as it gets. As he drew further, obviously west, what did it look like?
Yeah, it looks pretty good.
Yeah.
So we don't talk about that.
Yeah, and that's what I deal with guys that truck, water around or other things, and obviously they drive a lot, and that's the word. It's looking good. The price action sure says that. So what does a guy do here? Everybody's, I would say, under-hedged, as a majority. Like it's just one of these worst-case scenarios where it was good, never had that rally, never really got to a price that looked attractive even in the spring. And we had that exceedingly rare, so rare, in fact, it's the first time that's happened, I believe, February high, right?
Right. Yeah, I think that is the first. Oh, well, so let's just step back there because you have to talk about it. It's the insurance rate is way over where the market's been since February. So how do you hedge when insurance is way over where you would have been able to? Well,
you have the insurance level like that. That's what's really going to help guys out. And there's guys that really insured them. They kind of saw this coming, that it could be trouble, and they were a little more aggressive on it. Those guys are obviously more happy. But then just
happy might be a stretch.
Yeah, they're not watching it every day, worrying. But yeah, it's not really even that it's going down. It's what follows these types of years tends to be. Sorry, my phone is louder than I want it to be. It tends to be very unforgiving after you harvest. This isn't even the worst part. I mean, if it is what it looks like it is with this rain, the pain really comes over the next year. So you have your insured level, and then beyond that, there's no protection. What do you do with these levels? It was just starting to look good again to where you could manufacture a price, whether you were shorting futures, selling a call on top of it. Yes, that's not double hedging. It's just, you wouldn't want to go over your total amount of bushels, but you could make a price up there towards that 470 mark with the carry in the market, and now that evaporated again today. So now what happens is everybody just goes into acceptance mode. Like, they know it's falling. Time to think about the logistics of putting it all away and waiting. But they also realize putting it in the bin for the last 3 years has not worked at all. I shouldn't say it could have worked for you last year if you got rid of it in February or you sold most of it before the big break. But holding it into spring has not worked for years now. So nobody's fired up to put a whole bunch of work into a crop and store it and look after it. That's not free. The time's not free. And then sit on it for less of a price, which is what's gone on. So you would have thought that this year was going to be a lot more aggressive when guys were going to market, and it just never gave a guy a chance, and that's really unfortunate. And then the worst part is there wasn't the weather scare. There wasn't the news, and it just kind of trickled lower every day with a couple of big days down. But then we've had a couple of rallies like we've talked about where it's just getting to levels where you can talk about doing stuff, and then it falls at 16 cents.
And you got to do it immediately.
Yeah, and you have to do everything at once. And you had to assume like this thing in Iowa wasn't going to be anything, and it wasn't. He got up there, talked, and it was about farming to some degree, but it was on different topics, and it had nothing to do with the China deal, which is what the rumor was. So we are where we are, but every day we go to work, and like today I was on the phone all day long, and I'm doing stuff. It's not like there's nothing to do. There's certain degrees of more risk at lower levels, and then you also don't want to get caught in the trap of shorting into the summer low, and which is it'll make a low at one point. What are these levels? I don't know. What's your guess for the corn?
I mean, I'm convinced we're going to see 3 in December soon. But
a 3, yeah, it's very likely now that we're going to test lows at September. We'll hit in the 3s.
September is closed at 403 today. So
yeah,
that's pretty much again. I mean, it has bounced off 3 or 4 times.
I think it was $4.75. Likely to take that out. Beans are kind of a surprise. What I really don't like about the beans, and to throw a little more negative news on this, is that we hardly have any acres of beans. It's the lowest in a decade, besides if a weather issue had caused lesser plantings. And beans are trending down as well. So what does this mean? Well, we plant too much wheat. That's going down, even though the plantings are the lowest in 100 years, they say, or off and on it's lowest in 100 years, or if it's above that, it's just a little bit above that. So now we're not planting beans, and that's still too many, apparently the market's saying. I personally am going to be looking for opportunities in the back end of beans, but it's really not a fun feeling if you're farming right now, because you don't normally get a bean price or bean acre that low and then have this price action. That would be never have happened before. And so the market's saying it's too much of everything, and the next it would be pain. And that's what gets rid of the acres. That's what, fertilizer cuts back on the fertilizer, the yield will go down. So now we're entering the pain stage. I think, again, today, a lot of calls were like, why is it moving down so much? But it's more of the acceptance that was probably the summer high, and now we're headed lower. There was a lot of optimism last week, as there was a couple weeks ago, where you go home on a Friday and you feel like next week's the week where we plan, we start getting some of these higher prices and do stuff, and then you have utter collapse on Mondays. Mondays have been really bad for the grains, and today was ugly. And I am personally looking at stuff in the back end of beans. Like, if it is what they say it is it ever going to get tight? Well, look for spreads in the back end that might get tight that are getting clobbered. They're still carrying the corn market. There's still things that's inverted in July, December in the back of corn. There's still certain things that a guy can look for. I looked at 490 March calls today. That they were going for 10 cents. Is that great? No, they were 14 on Friday or Thursday.
Yeah.
But no, that's not great for that amount of time. But still, if you could use a $5 hedge, maybe that's something that you're looking at. I've been shying away from that stuff, but now we're past the point where weather problems generally develop for the corn crop. They're saying it's going to pollinate in good weather, and it has a tough road after that. Where beans still, you can burn them up in August, but you've been outside. I mean, it was just raining for an hour here.
Yeah.
It's one of those summers where it's very timely rains, and that's what the market's trading.
I like to hedge off my backyard. It was raining here, so.
Well, if you hedge off what it looks like around here, you're going to be 250. It's going to go down to 250.
250, right?
Yeah, this looks awfully good.
Tell me, I mean, are you watching like the July 26th, November 26th for beans?
Yeah.
I think that that is a place that could have a story. It's under 20 cents over.
Would it get to 15 cents above? That would be because corn's so crummy that there'd be more bean acres next year. November 26th is probably going to have a harder time. And if we have the acres we have for beans, assuming decent demand, I mean, where we were just 35, 40, 50 cents most of the year for July 25, November 25, this year's set. It collapsed kind of late there. So if you get down in the teens or you can get down to zero, that starts to get to be attractive levels where I look at that. Also, we talk about the meal quite a bit. That meal just keeps falling, and there's really no news there. But you have a biodiesel. You have a lot of stuff going on. So it's not all bad news. I'm looking out in the back end of beans, seeing if there's anything that we can do there. Corn, there's still stuff we're doing. So if you call, we're definitely doing stuff, and we're doing stuff today. Can't really talk about it. It would be a specific recommendation. So give us a call, and we'll go over what we're doing for corn. And I'd like to say just be patient in this market, and it's going to pay off. It doesn't really look like that right now.
You got to be fast in the market is really, I mean, and we've said that a few times too, but
this is a market where you're seeing both sides trending lower, but you're seeing both sides, and you do need to take profits when you have them. It is just not, it's not an easy money. Like, it's such a low level that puts are hard to make money at. Calls certainly haven't been making money. Option selling's been doing better, but the premiums are so low. So they've taken a lot of what makes the market good this time of year out completely. You see a collapse, and in past collapse, it's at higher prices, and a lot of guys are like, I'll wait for that bounce and I'll do something. They never get anything on. This year, it's just kind of been down. And so if they weren't going to do it at higher prices on the way down, I really doubt a lot of people are going to do anything on the way down at lower prices, and I don't blame them.
No, not too excited down here to do much of anything. I do know I'm going to put you on the spot because I was thinking of it as I was looking up other spreads here, but there is a seasonal. It's probably not the year, but there's a seasonal on soybean meal right around now.
Yeah.
And I think it's the October-December spread, right? That there has been a seasonal on that.
It looks like a commercial thing. Yeah. I mean, these are, when we're talking about these spreads, if you go look at a 20-year chart, you're blowing past the old lows. Like there's never been a year like this for soybean meal. This is the first.
So not an opportunity. You wouldn't look at it because the seasonal doesn't set up the way all the other 20 years set up.
It's like
you've shared that 20. You can find John on Twitter.
Yeah, that
Blue Creek Commod, right? And you shared that chart. For
that we were watching it, and I got to the point where we're probably going to give up on it because it looks so hopeless. Really hard to bull spread anything in this environment, but you will get down to low lows, and the funds will be record short, and eventually an opportunity will come out of this. We're looking for some sort of trigger, and it's just not happening. I mean, there's just, there's nothing that really jumps out at me and says, hey, this is just around the corner, a seasonal, anything. This is summer. At this point, it usually goes down. It is going down. So what you want to do is start tracking that stuff and not necessarily putting it on. And then when you get the setup, and you'll kind of know when it is, like something's changed. It's gotten hotter and drier in South America, anything. then at that point they get to be a lot safer to look at. But it's catching a falling knife, but it's not a very fast falling knife. It's a very slow, really grinding, painful grinding. But you're seeing some stuff that does worry me, like stuff that you haven't seen before in U.S. grains, like I talked about with the acreage with beans. That's a very big warning sign that overall the U.S. is growing too much acreage. And generally the way to get rid of acres is really low prices, and of course demand will come with that, and it will fix itself. But this does look like we're going through a painful process. I still say keep your eye on beans. We got the biodiesel stuff. They're going to push this too low, and I do think there'll be opportunities there. What I'm hearing on the phones is guys don't want to store beans. That's pretty normal in any year. And they're going to store corn, and I think that's everybody's plan. I'd be surprised if I hear a lot of different, but guys do not like to store beans. I mean, what have you heard?
I mean, right along those same lines, and I don't know that I'd necessarily disagree. I'm not sure I'd be storing anything. But you got to look at price too. So if you want to re-own on paper,
it's very cheap.
Right now, re-owning on paper. Of course, it's not harvest. You'd still have to haul it all in. You can't haul it in right off the combine.
Yeah.
Right. So you know, it depends on your situation what you're gonna do with it. But
yeah,
I'm not selling right now because of where it's at, but I'm not buying. So what do you do?
It's a market that we have been headed for a few years, and they're going to say the supply is going to drop in both beans and corn. On paper, it does, but the trade doesn't believe it. It didn't believe the numbers from last year, and that's really the issue here. If those numbers were real, 1.8 billion in corn, and whatever they have, 295 for beans, we definitely wouldn't be down here. The trade doesn't believe that that's what's going to happen. They even quite possibly believe it's going to be above 181 right now. You don't hear a lot of guys arguing against that even. And then other guys will say we've topped out in yield and we can't get past 178. And that might be true too. We'll find out more, but that unfortunately is not until January.
Right.
We're going to have the first indication coming up here where they could move the yield around, and they might raise it this year.
The problem is it doesn't matter what you believe.
No, it really doesn't.
It's what the trade does. So we could all be right, and it could be 176 this year. But to your point, it's not going to get traded until when? Like you said, January.
Yeah, so what you want to do is ride with the trends. I'm shying away from being on the short bean side of stuff just because of the acres and you have more growing season there. But you want to jump in with what they're doing. Last year, they started buying aggressively late summer, and then they didn't stop until February. And it was painful if you were the other direction. They said it was going to be a huge crop, and it was. Then it started shrinking on paper, and the trade believed it. And then every report, it was shrinking more and more, and demand picked up. It looked like a solid bull market had formed there in corn, and then it looked like we're going to need a lot of acres, and none of that's played out this way. It's been a disaster since February, with a few brief rallies that you have to do everything on in one day, which is not realistic at all. And then if you're not taking profits, they disappear somehow. Guys are losing on the long side and the short side, but now for sure on the long side. It's just been not a very nice market with perfect weather and no weather rally. And we've talked about it quite a bit, but this whole set of the way it went down is really rare that it would happen this way. And guys have a hard enough time with marketing the way it is. This unforgiving year like this, it makes it twice as hard in an already very difficult thing to do. And we haven't thrown a lot of ideas out because we've been at lower prices. So you're taking a lot of risk, but now we're moving past the weather window where the risk is the most. And now you got to start looking at doing anything that you can do. So again, feel free to call me and we'll go over ideas more specifically, but let's move on to a little more good news. Cattle.
Yeah. Cattle. Wow. Yeah. Way up again today. And the only thing green, because even I want to talk a little stock market after cattle, but cattle look good today.
Yeah, the feeders actually, I believe, are carrying a premium. The last feeder index I saw was July 2nd. I don't think they published a new one yet, and it was 311 something and falling. It had been falling. So we are carrying a premium now in feeder cattle. And that's that hasn't happened since last year, I don't think. So
I better go buy some feeders and sell some calls, huh?
Yeah, they're saying the feeders.
Or am I buying puts?
Yeah, I just priced that feeder put today. I mean, you look at a January put, you're going to pay $7,000 near the money or at the money.
Really?
Yeah.
Okay.
So there's going to be a lot of risk going on, but at least it looks like a different market. It's been really doggy. The thing with cattle, it's been under cash, really unhedgeable board. Now you're getting to where feeders make more sense to hedge just because we're carrying a premium. I'm not saying go hedge them, but you don't want to hedge a market that's $15 below the cash market on the board. It gets to be really tricky to do that. Live cattle are still, I would say $9 under where June went off. And that's where they would consider cash $225. We had a little higher cash trade, and I think that's what today was about. But that opened, it kind of saw grains, and it didn't want to open higher. It wasn't like it was right out the gates going higher, but it does have a different look today. Now, tomorrow's an important day for cattle. We've seen some of these big one-up days, and then it's taking it all back the next day. So tomorrow, either you're building on this, and this is a dip that's going to buy, and we're going to make new highs, or it's going to be a right shoulder kind of developing. If you kind of look at the chart, it looks like a head and shoulders potentially developing here, which would be one shoulder would be the left side, and then the head would be where the high was taken out of the left shoulder and then came back down, and then the right shoulder just is another bounce up, but not to the old highs, so it doesn't take the head out. So you basically have two shoulders and a head. And that's the pattern it had been forming. So we'll see, but at least there was some good news there. It opened down, 40, 50 cents, and slowly but surely they bought cattle all day long. And I think they're just trying to get closer to cash. Cash crept up a little bit. I think that surprised them last week, and it's just in a better spot. All the cattle guys I talked to are happy guys. I mean, it's an enjoyable thing to hear how well they're doing, how their families enjoying that. There's, one guy's got his young son involved, or a younger son, and he's been doing well in the cattle. So they've worked hard for years, and these guys are in North Dakota, and it's nice to talk to guys and see how happy they are, because there's been a lot of rough years in there.
Oh man, I mean, the past 10 years up until last summer really was.
Yeah.
I mean, it was all about the box beef at that time. It was all about the Packers were making all the money,
or Oprah and the pink slime. There's been a lot of work and not a lot of pay, and now you're getting paid in the cattle industry. Now it'll probably end really poorly, and I don't even think they disagree. When you start throwing around numbers like this, probably financially it's going to hurt eventually, but really there's no signs of herd rebuilding. There's no signs of anything to say this is over. But that being said, it won't probably be the supply that ends this. This will be on the packer side of stuff, on the demand, because they got to shove prices up, slow the kill down. That's what had been happening. I would think it's going to intensify. This is only sustainable for as long as they can pay, those cattle, and they are losing money on killing the cattle, and of course nobody feels sorry for them. But it is a business, and eventually you do have to make money.
The reality is, I mean, I just did this on last week for the 4th. I was looking for my family. There's 3 of us at home.
Yeah,
I could get 3 steaks in the family pack for $35. Or a pack of boneless, skinless chicken breasts for $9.
Yep.
Right? I mean, I went with the steaks because it was a holiday. And they were delicious. But
this is why it's happening right there.
Right. But the reality is that's a huge difference.
It is.
And most often we do go with the chicken, and so that's the thing. Like, something's going to happen there at some point.
Yeah, and that's the good news, that people's tastes have changed. They like that higher protein, and even with that huge gap in difference, and you go look at pork over next door here, and you're going to notice even bigger gap. They're simply choosing beef. They like it. It's part of their diet. They are maybe not believing if you believed what they've said since the 70s, beef's bad for you, stay away from eggs and beef, or keep it in check. I think people are doing their own research and drawing their own conclusions, and that's another big part of the movement is the protein. Yeah. Not just in the beef, but protein in general is really in fashion for diets now. And that's helped. And I've said this numerous times, and I've now noticed people saying this on Twitter too, is that everything in the grocery store went up so much that it just got to be overwhelming. You knew you were going to spend a pile.
Yeah.
You throw that beef in there because it tastes good.
Might as well get what you want to eat if you're going to spend
all that money. And I think that's probably one of the biggest parts of it. I've thought that for a long time, that before it would really stand out like, oh, this is a special treat, and you could really buy a lot for not that much, but you'd skip the beef because that was just, like too much.
Yeah.
And when everything costs money, you just feel overwhelmed. Not that you have more money. Right. You're just like, if I'm going to go broke, I might as well enjoy my beef.
That reminds me, for you guys who love beef out there, cattle guys, or maybe guys who love to make a brisket. I'm just curious, how long do you boil a brisket before it's good? I just want to know, like, what's the time for boiling a brisket?
I've had good luck with an hour.
Have you boiled? I love it.
No, I've tasted some that felt like it had been boiled for an hour. Yeah, that's. We could probably have 4 hours of talk on how to cook brisket. I don't know how, and I don't try. I would like to be invited to places where they're cooking good brisket.
Buddy who does it amazing, and I'll let him continue.
And
follow the Traeger directions.
Just kind of grease the wheels and bring beer over there, and they'll keep inviting you. But that's how I cook mine.
Let's get serious on cattle for a minute here, because I'm going to keep bringing spreads up today.
Yes,
that October-December spread. I know you love it. We talk about it all the time. We've been October under December. What are you looking at?
Well, we've been in it numerous times. That October does not like to carry a premium to December. It had carried, I think, 80. I might have got up to $1 premium. And then even when cattle was going up, that October liked to slip under that December. It's one of those spreads where October likes to be under December. Now, as we move forward, that's not always the case. As you get closer to the end of summer, October can carry a premium to December and often has. But up until about this point, it really does not feel comfortable with a premium. Bear spreads are tough in cattle right now just because we're under cash. But they haven't always worked either. Like that June was real sluggish versus August, being $20 under cash. Had a few guys put it on, didn't work. And then all of a sudden, one day it worked. I mean, it was off to the races. So I would think that they're going to bull spread more than they're going to bear spread right now. But the bull spreads could end tomorrow. I mean, we go up another $4 or $5, cash could come down, and all of a sudden we're at parity with cash. Then there's no reason for the heavy bull spreading unless it was going to go a lot higher. So I'm kind of looking at some of the deferreds. I mean, you have Feb over April. That's pretty rare. But it's not as good as the October-December. And then as further you go back, April carries a premium always to June. Very rarely do they get to be the same price. So there's not much for opportunity there, but stuff to keep an eye on. I want to bear spread it eventually, but there's no reason to right now.
It makes sense. Yeah, I mean, you got to jump in front of a freight train, right? Or you're going to bring a seine in.
Yeah, it's these have been difficult markets, and I think if you listen to us a year and a half ago, we have a lot more ideas and we're a little more optimistic. These markets got very difficult in September. The way the money's flowing into grains, cattle then turned into a bull market. That obviously, if you bought it, you were looking very good, but when you're hedging, you're most likely on the short side. So it got to be this market transformed into something we've never seen in the cattle. It wasn't so much the supply as it was the demand. Turned into a big cattle bull, and on the demand side, and then grains they just didn't have anything. Like September, you remember they started buying beans for no reason.
Yep.
And then they started buying corn, and it looked like this is going to be a different year. And then it all collapsed and took it away. And it's been really hard, really since September, to trust any moves in the grains. And that's why grabbing profits has been the way to do it. And that's hard to do in a hedge account where you're hedged and then you're getting in and out. That's just not a common thing, nor do you want it to be a common thing. But that's the only way that a guy is getting ahead here with these swings. And now the bounces are getting to be less and less. And then down 16 and what was it, 30 in beans today?
Yep.
And then wheat. I mean, why even talk about wheat? That goes down near every day.
We rarely do.
It goes up like three-day spurts, and that's all she has.
What I think is interesting, so we talked about this last summer, probably about this time, or maybe it was closer to August, back on cattle. At that time, cattle was about $10 under cash,
10 or 15.
10 or 15, and the curve was completely flat. We are back to basically a completely flat curve again.
Yep.
It's all, 215 in August, but October through April are all in the 213 range.
Yep.
That makes it really tough, doesn't it? I mean, what are you looking at?
I think that it's getting to where it needs to be with the fundamentals we have. So generally we peak out seasonally demand-wise on the beef right now, and then feeders peak out in August. That's the seasonals. And then as you go towards fall, you usually come down in cattle, especially October. And that's why October doesn't like to carry a premium to December. It's generally a very weak contract at a weak time of year. August can be the same way. So it's just getting to prices where it's likely to be. Like, we talk about the job is to get to the number that it should be, and oil was there for quite a while where it was comfortable right around that 62 mark. That's what it feels like cattle. Like they expect cash to be there around 213. I don't think it's overpriced. I don't think it's underpriced anymore. So between cash coming down and futures coming up here lately, everything's kind of healing up, and the cattle looks like it's at the right price. So the question is, what's demand going to do and what's cash going to do? Because that is the direction cattle is going to go. 2 weeks ago, lower cash, then last week was a higher cash. It's got the bulls excited again. So wherever cash goes, that's exactly where futures are going this week, I think.
Makes sense.
Yep.
Let's jump to the stock market to kind of wrap up. Stock market, oil, dollar,
Melt up.
Some of those things. Well,
Melt
the Dow
up.
is down 500 points.
Is it really?
Yeah.
I did not notice that today.
Yeah.
So
Dow
why
was
is
down
it down
500? Oil was up $1. Dollar was up 30 cents.
And these markets have been random like that. Oil's been really
Not 30
random.
cents, sorry, 3 cents.
So the Dow's down 500.
Yeah.
Yeah, the outside markets have been not a really easy read with the trade and the tariffs and all that going on. Trump delayed the July 9th deadline. He moved it out to August 1st. So the market might be getting nervous about that, but we've seen these cycles where it goes down and then it goes back up. I should have been buying it because every dip has been bought in the stock market since 2008. I mean, that's really what's been going on. Why doesn't a guy join the easy side? Because you think it's going to collapse. But today, I'm surprised I didn't buy it today. It's down 500. But really, a guy, that's all dips have been bought.
There's still time. It's only 2:30.
What makes me nervous is the retail. It sounds like the retail side, and the smart guys supposedly have been getting out, the hedge funds, and the retail guys, the guys that you golf with that brag about their stocks and there's the hot stocks picks. That's who's been buying lately. So call it dumb money, call it what you want. But that's supposedly what this latest rally is built on. Other guys are saying the trade deals are coming together and you're going to see the golden age and it's going to be a melt up. So really, what do you believe? I don't know what to think about the stock market. Seems a little overpriced by every measure, but everything just kind of keeps chugging along.
Yeah, I mean, we've been saying it seems overpriced since 2020.
Been
really,
wrong.
You should have been buying it.
Yep, the whole time.
The whole time.
It's been apparently underpriced because that's where they've been. They just every dip they've been buying. And then gold and silver. Usually we have some interesting markets to talk about, and they're grinding higher, but you can't count on that continuing. Like, are you chasing $36 silver? Probably not. But could it accelerate to 45? Absolutely. We haven't seen that in many years. But the metals could go at any time because you get these guys fighting about interest rates every day, and it's really hard to know what direction they're going to go. So more questions than anything. And I talked about it a couple times already. You're really in a kind of a trade mode. Like, you don't stick with stuff very long. Things change. Trump definitely is a big part of that with the way he talks about the markets and the way that the tariff stuff's been going. So I just think 2-3 day swings is what a guy's looking at pretty much for everything, and then resetting, because these markets are not real fun. I'm sure there's guys doing good in them, but very, very difficult to know what it's going to do day to day, including the stock market. But lately, it's obviously been going higher.
Makes sense. Anything else for today, Jon?
No, I was hoping for, and how many of these have we said that we were excited to talk, on the Thursday Insider. We're set to talk and have a great Monday show. Yeah. And you just see these utter collapses on Monday. And by the time we actually we should change the day, because
if it doesn't collapse on Monday, how can it have turnaround Tuesday then?
I'm going to go look how many bad Mondays there's been, because it sets it up so good Thursday and Friday, and you get excited because Monday finally some good news to talk about, and we have a lot to cover, and then complete and utter devastation, and there's nothing to talk about. And we very rarely run out of things to talk about, but these markets are definitely pushing a guy that way. Just keep your powder dry. That's what we've been doing, not taking big positions. I would have loved to have been hedged in February. Had we known that was the only window that we had, obviously we'd have got more aggressive. But now we're at low prices. It just becomes dangerous. So take it day by day, and things will change again. It always does. The biggest change is the first market I think is gonna change. I think is soybeans. Boy, she's on the ropes today. Maybe wheat. Something will change, and we'll have big news, and we'll talk about a lot of different stuff. But these are difficult markets, and that's just what we have.
Yeah. Wait until you see something and be ready to act.
And you got to get ready for the big race. That's right. You have a full 26 miles, correct?
26 miles on a trail.
Yeah, on trail. It's not even flat.
No. Did I tell you I ran the last 3.5 last week?
Okay.
So had to check it out. I was out in Duluth, and I'm like, I'm going to run the finish on the trail. There's a couple spots where you actually have to sit down and scoot down these rocks.
Steep. Yeah, Duluth, there's some steep hills
there. Some rocks you got to go up with your hands, which will be fun 23 miles into the race.
Yeah.
So it was 1,000 feet of elevation in the last 3 miles after running 26 miles.
Yeah,
or 23 miles. So it'll be fun.
So that's on Saturday.
That's Saturday.
I'll be sleeping in for sure, because we're fishing Lundmania on Friday, which is the big walleye tournament in Minnesota, which is really fun. Lund Boat puts it on, and it's fishing for a boat. So that'll be Friday. So I'll be sleeping, but when I wake up, I'll be like, boy, I bet you Ryan's tired.
My bus leaves the campground at 4:45 to the start line.
And you have to put it on Facebook, and you have to put it on Twitter, or I'm told if you don't, it doesn't exist.
It doesn't count. I'm planning to not share a whole lot of. Maybe I'll do a whole Twitter thread about all my training. No, I won't.
We'll talk about it unless it's a disaster on the next episode for sure.
Yeah, I'll let you know if I finish.
Yeah, that's a good goal, because it's a trail. It's not even flat. 26 flat is hard enough. Yeah. Much less. I guess I skipped lunch today. 26 is hard enough, but then you throw trails in, and just to finish that's a hard thing to do.
Yeah, but I mean, there'll be some power hiking going on. Let's just say that. I'm not running the whole thing, which is the only way I'll do the marathon is on a trail.
Yeah, it doesn't.
Because I'm not going to run
but it doesn't look too hot though, right?
No, it looks actually really good, like 70 for the high.
Yeah, that's good.
We'll see if that holds. Although we're camping, so the night before it's supposed to be thunderstorms. Good. And my bus leaves at 4:45. So this could be a really fun start.
You don't need to watch the markets. It's good that you're doing this. So have fun with that, and we'll definitely talk about it.
You should probably leave your number.
218-731-1578.
Thanks, John.
Bye.
That rally lasted a long time, huh?
Yep. That was quite the rally, all of one day to get everything on and a hold of everybody. Makes sense.